Hello everyone and welcome to another episode of Ask NDB Wealth Year in Review 2023. I'm Daham Hettiarachchi and this is my colleague Ishani Mota who will begin the review.
Let's begin with a recap of a few key events that impacted Sri Lanka's financial markets in 2023. Starting off, following the 2022 IMF staff level agreement for an extended fund facility of approximately $3 billion, in March 2023, Sri Lanka received the first tranche, amounting to $330 million. This was followed by a second tranche of $337 million in December. Thereafter, in July, the long-awaited announcement came with the unveiling of the domestic debt restructuring proposal. The restructuring mandated a step-down coupon structure with maturity extensions for treasury bonds held by superannuation funds. Overnight, bond rates experienced a significant fall by approximately 10%. Thereafter, in November 2023, a critical in principle agreement was reached between the government and external creditors on foreign debt restructuring, covering approximately $6 billion. This agreement too includes a mix of maturity extensions as well as reduction in interest rates. The impact of these measures were evident across key sectors. The exchange rate experienced a remarkable turnaround, with the Sri Lankan rupee strengthening by 12.1% against the dollar, ending the year at 323.92 rupees to the dollar. Gross foreign official reserves nearly doubled to $3.6 billion by the end of November 2023, compared to $1.9 billion end of December 2022. On the trade front, import restrictions, except for vehicle imports, were relaxed by October 2023. Despite this, import demand only saw a modest growth of 9.4% in November, contributing to a trade deficit of $4.4 billion. However, this is an improvement of $400 million compared to the same period in 2022.
Turning our attention into inflation, the year ended with 4%, which is well within the CBSL range of 3 to 7%. This achievement is particularly significant given the challenges faced in the first quarter when inflation levels were in high 40s. The latter part of the year even saw negative low-teen numbers in food inflation as a result of effectiveness of the monetary mechanics and the base effect impact. In the second half of 2023 brought a marginal private credit growth after 12 months of negative month-on-month growth. Although not considered a full recovery, we expect further progress in private credit growth in 2024, driven by gradual reduction in interest rates. Observing the interest rate scenario, market rates across all tenors witnessed a decline throughout the year, with more significant reduction occurring within the short end of the yield curve, especially within treasury bills. This has corrected the yield curve inversion witnessed earlier in the year.
In the equity market, the All Share Price Index reported a gain of 25.5% compared to the 16.4% gain of the S&P SL20 in 2023. Despite more than a 50% drop in earnings, foreign flows were a net inflow of 4.35 billion rupees, and the market capitalization stood at 4.25 trillion rupees as of end 2023. That's all for the year-end review of 2023. Thank you for joining us, and from all of us at NDB Wealth,
Happy New Year.
Happy New Year.